The most efficient way to analyze the fundamental of any economy is to have a look at their currency, the domestic currency. Recently, the Indian rupee has been in all sorts of news and for negative reasons because it has been creating new lows against the US dollar. Or, if I place the US dollar INR chart, we will see that the US dollar has been creating new highs against the Indian rupee. Currently, it is trading at near 86, 87 levels at the spot, and the all time high or the all time low for the rupee is close to 88 rupees. So the question is the Indian economy negatively poised for the future given that our currency has weakened apparently so much? So, like most analysis, the devil is in the detail. The fact that is clearly visible, at least technically, is that the Indian rupee is relative to the dollar structurally weak in trend, that is it is in a bearish trend, or we could say that the US dollar has a weak bullish uptrend against the Indian rupee. The chart here shows information from 2010, but it can show for earlier, and I have in the Excel sheet created the USD INR exchange rates for April of each 5-year interval. And I have chosen the first decade after 1972 Bretton Woods Agreement, at which point the Indian rupee was close to 5 rupees or 6 rupees to a dollar. So here we will see that on April 1980 the rupee was 7.9 to the dollar. In April 85 it was 12.43. April 90 it was 17.3, and in the decade April 80 to April 90 the rupee had devalued close to 120%. We know that if inflation is at 8% CAGR, then the valuation will reduce to half in 9 years. That is, price of things double every 9 years. So here this gives us a brief estimate that our inflation also would have been higher than 9% during this interval. From April 1990 to April 2000, we lost another 150% in currency valuation. That is from 17 rupees 30 paisa to 43 rupees 65 paisa. From April 2000 to April 2010, the rupee remained fairly stable, but this is largely because of a few reasons. First of all, April 2000 or 1999 was the start of the dot-com bubble, in which the US economy was hugely impacted. Subsequently, the US economy began to reduce their interest rates, making it less attractive for debt investors to put their money in the US market, or making countries which pay sovereign debt at a higher interest than the US more lucrative for investments, strengthening the local currency. Then also we know that in 2008 there was the subprime crisis. So in the phase of epic US dollar weakness, the rupee managed to lose 1.42% against the dollar, which has been the best performing decade for the country, which also has been the worst performing decade for the US. But even in such a phase, it appreciated against the rupee. From 2010 to 2020, we are seeing a depreciation of 69%. Now, a 69% depreciation is, with the exception of the extremely bearish 2008 phase for the US, the best depreciation that the rupee has experienced over a 10-year period. And the current 88 rupees to the dollar relative to its last 10-year period is at a mere 38%. We are talking about a 38% depreciation over a 10-year period. So we could use the CAGR formula to come at an average value of approximately 3% per year to get this number of 38% over 10 years. In my view, if we are to plot the graph of these percentage changes, we will see that the rate of change or the rate of weakness of the Indian rupee relative to the dollar is actually in favor of the Indian rupee. And to assess the relative increase in strength of the Indian rupee, it is best if we compare it with other currencies in the world. For example, against the US dollar, first, let us focus on the four majors that are traded in the currency derivative segment. So USD INR, US maintains a strong bullish uptrend against the rupee. This is at a time where the interest rates of the US are at the highest relative to the rupee. So this kind of a trend is expected, which is reasonable. But will it sustain is the question. So the USD maintains a bullish strong uptrend against the rupee, and that's largely because it is continuously trading above the 20 period moving average and has been doing so for a very long time, for close to 3 years now. Let's have a look at the next major currency, the British pound INR. And here we will see that the British pound INR, I will just mark a horizontal green line here, which will show that the British pound had created a life high of 107 in 2013. And after nearly a decade, it has managed to take out that high. And from 107, it is currently trading at 111, which is a close to 3% rise in a 10-year period. And please note that we are comparing the currency of an emerging market with a developed economy. For an emerging market where inflations are much higher, where trade deficit does exist compared to trade surplus in economies, for there a currency to depreciate 10% or 3% in a 10-year period is very significant. It basically means that on an average during this period, because the growth rate of the country is much higher than the rate at which the currency has devalued, it is reasonable to expect that on an average the Indians would have been more rich than the Britishers during this phase, which is an exception in a multi-decade post-independent history. Let's have a look at the other one, the euro with the INR. It is disappointing that the internet is acting up. And same like the British pound, we will see that the euro had created a life high of 92 in 2013, and after 12 years it is now trading at 93 in 2025, a 1% increase in 10 years. Of course, it is looking like it is going to give a fresh breakout, but after 10 years of range, there is a lot of catching up for the currency to do in order to normalize with the rupee. Let's look at the next one, Japanese yen and the Indian rupee. So the chart is slightly unclear on the Japanese yen. So let us just, here it is looking like the Indian rupee is strengthening against the yen because we can see a bearish crossover. So there is some inconsistency with the chart, so we will ignore the readings that are here in this chart. So with this we have assessed the performance, or at least tried to assess the performance of the Indian rupee with the developed major currencies in the world. Now let's just have a look at the other major currencies which are not traded in the CDS market. For example, the rupee with the Australian dollar. Once again, the internet is now. If you look at this, the Australian dollar had created a life high in 2013, which basically means 2013 seems to be a pivotal year for India. By 2013, for example, if I just focus here, you will note that prior to 2013, the trend on the Aussie dollar was very strong, where it created a life high of 62. And now, almost 12 years later, the Australian dollar is trading at 54, which is at a discount of almost 15% relative to where it was 10 years ago or 12 years ago. That just goes to show, and Australia is by no means a weak economy. It is a developed economy, as we all know. We can check again with the New Zealand dollar and the INR. Once again, similar to the AUD INR, the New Zealand dollar also trades at a near 5 to 6% discount to the rupee from its all-time high levels, which it formed at 2012-2013, which it briefly tested just before COVID, but once again is in trading in a range. Now, we can also have a look at other important currencies. For example, we have the Danish krone and the INR. So here we are looking at the forex markets where these currencies have high amounts of liquidity. The Danish krone, the Canadian dollar, the Japanese yen, etc. So we are just, obviously there is no way to trade these currencies. We are just using technical analysis as a means to create a fundamental bias. And here we will see, much like the British pound, so similar to most the European economies, we can safely say that the European currencies are at currently threatening to give a fresh breakout against the Indian rupee, but after 10 years, which means for the 10-year period relative to its previous high, or 12-year period, the rate of change is almost 0%. And now we will try to establish the relation of the Indian rupee with certain other currencies, such as the Turkish lira. Now here at this point we will start moving towards emerging economies to understand how they have fared relative to the rupee. So now here you will see that the Turkish lira is in a strong downtrend against the rupee. From highs of nearly 28 rupees, it is currently trading at 2 rupees 50 paisa. This just goes to show how strong the Indian rupee has been against the Turkish lira, or in general how weak the Turkish lira has been, which is another emerging economy like India. We could also check how the Indian rupee is faring against the Pakistani rupee, which is once again our neighbor. I think a better chart would be the INR PKR. So here you will see how the Indian rupee has this huge uptrend against the Pakistani rupee, which has started off in 2018, where where the one Pakistani, where it would require 1.5 Pakistani rupees to purchase an Indian rupee, it currently requires approximately 3.2 from highs of 3.6, 3.7. And this looks like a pullback on an uptrend, and this looks like a very strong uptrend. So the Pakistani rupee might be seeing only a temporary support, because once this support is actually established, this kind of a chart looks like it is ready to break out from the 3.7 levels also. We will have a look at, let's say for example, the Mexican peso with the Indian rupee, which is another strong emerging economy. Strong because it shares its border with the US. It has huge trade with that country, and in general the Mexican peso is one of the more widely traded currencies in the world. And here you will see that this strong emerging economy is trading in a range against the rupee, that is from the high that it created of approximately 5.2 in 2013. It is currently trading at 4.2, roughly a 15-20% discount from its own highs of the value in 2013. Now my point is this: if the domestic currency, that is the Indian rupee, is really weak, then it will reflect so on all major securities in the world, be it Singapore dollar, be it the Russian ruble, be it the Turkish lira, Mexican peso, etc. Again, if your currency is weak, then it will trend downwards against all the other currencies in the world. For example, the Turkish lira or the Pakistani rupee or the Argentinian peso. These are all examples of currencies which are trending down or have been earlier. Argentina will obviously reverse its trend with the inclusion of the extreme far right leader, which has been consistent with Argentina's history in the past, by the way. So the point being that our domestic currency should be in a downtrend against all currencies in the world, if it indeed is in a downtrend. But if it is in a downtrend only against the US dollar, and showing weakness against Europe, but in a range against Australia, New Zealand, or the other developed economies, and in an uptrend against the weaker economies, there is no way to decisively conclude that the Indian rupee is losing more value than is out of the realms of the ordinary. And as we have seen in this Excel sheet, the recent declines are actually far favorable as compared to what we have experienced before. And it is not an overnight change that we will become a country from a trade deficit to a trade surplus. The country will have to take steps in that direction for many years till before this is realized. But by and large, it looks like we are moving in that direction, because the rate of change or the rate of decline against these one of the best performing currencies in the world, when it is at its highest interest rate in the world, is very superior. One must understand that, let us say for example, a country like Pakistan has a US dollar denominated debt of, let's say, $100 billion that it owes to other countries. When the US dollar had interest rates of just 1%, the Pakistan government had to only pay $1 billion and as interest payment. But now, because of the increase in interest rates of the US market, let's say at 5% or 6%, against the same $100 billion debt, that country now has to give away interest of $5 to $6 billion. And now the question is, how will it pay that $5 to $6 billion? It will do that payment by selling off the Pakistani rupee and purchasing the US dollar in order to make that payment. In other words, since many countries in the world are actually under dollar denominated debt, every time the US raises interest rates, it punishes all of these economies, and consequently the whole world waits for the US government to reduce its interest rates so that the strength of the dollar weakens or local currencies are supported. In such a phase, the Indian rupee could strongly outperform these countries once again. With that in, I felt that this video would be useful because I wanted to show how technical analysis can be used in order to form a fundamental opinion, and how this opinion could be very different from what is currently being peddled on social media. Currencies are used as a symbol of national pride, and if there is a decline in the currency, then as citizens of the country, one has to definitely take cognizance of it, because many decisions that we make in the future are going to rely on the strength of our own domestic currency. But if they're simply not in a decline, then I do not see the reason for fear mongering. And this video is an attempt in that direction to show that the Indian rupee is not a weak currency, not because we are stronger relative to Turkish lira or Pakistani rupee or Argentine peso, but because even against major economies like Australia, New Zealand and so on, and Mexico, we are holding up, which is clearly visible, and the price of the rupee is stronger than what it was back in 2013, despite India having a higher inflation than most of these countries. With that, I hope we have all learned something new. I wish you all the best.